Moving on to NIIT Limited, that is in focus after winning a repeat order from Norway's international energy company called Statoil. This is a training services contract for a period of 5 to 10 years. Rahul Keshav Patwardhan, the CEO of the company, joins in on the phone line. Good afternoon, Mr. Patwardhan, and thanks for joining in. Can you give us the size of this order win that you won from Statoil?
Good afternoon, Prima. We don't disclose financial numbers around specific deals. However, what I want to emphasize is that this is a renewal of a 5-year deal for another 5 plus 5 years. Number two, it was in competition with every single player, serious player in the outsourcing space for training. And most important, it's a full scope contract. Earlier, we were involved in a few towers of training outsourcing. Now this covers the entire stack of all training outsourcing domains.
So, Rahul, can you help us understand that since this is a repeat order, what's the kind of margins that you enjoy on this? And since it is now bigger in scope, how much could be an upward revision here?
Again, we don't discuss margins on specific deals. However, we have given in our outlook guidance for the CLG business as a whole. We do expect to continue to clock the 15% upwards revenue growth for the business. And this deal will solidify that number, obviously. And on margins for the business, we continue to provide an outlook of 12% on EBITDA.
Is it possible to give us a sense of what the total order book of the company stands at now, after this, as well as the pipeline?
We have we disclose a number called visibility, which is not exactly equal to an order book, because this business tends to have a lot of MSA contracts where we get a lot of SOWs, but not necessarily hard coded in terms of committed value into the future. So when we closed in our annual report 2 weeks back, we had reached 190 million of visibility, and this would add substantially more to that.
Okay, so you had revenue visibility of $119 million as of March 2015? 190.
190, which is visibility over the next 5 years.
Okay. Also, if you could just, help us with, a general question about, the company's operating level performance, because you are making losses at the EBITDA level, as well as, for at the bottom line, at least in Q4. For FY16, when can we expect a turnaround?
As we indicated in our investor meet last week, the CLG business, which is the corporate business, which involves the deal that we just talked about, we are expecting to grow at 15+% on the top line and an EBITDA margin of 12% as we've been doing in the past. On the SCG business, which is our skills and career business, we are clearly expecting to be back to growth and back to profitability. We're not giving a specific number for that, but that would be a big change from the trajectory of the business in the last 3 years. And the private schools business, which is our third business, we expect to be growing at greater than 10% on top line with a greater than 10% EBITDA. So overall, the company will clearly be doing much better on the bottom line for the next year, for the coming year.
All right, Rahul, we'll leave it at that. Thanks so much for joining in, and wish you good luck for the coming few years.